Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term Boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And we're going to look at Uber. Uber my goober. That's right, ladies and gentlemen. Because I heard through the grapevine that old Uber McDuber was a 10x stock, bro. Wouldn't be surprised if Jeremy LaFoo-Foo bought this stock. I don't think he did, though. So let me go ahead and share my screen. And we're going to do a slightly more in-depth video than I normally do about stocks, okay? This is going to be like 20 freaking hours, but we're going to go check out Uber's most recent investor report. We're going to go look at their most recent annual report so we can read the risk factors. We're going to look at Uber's financials, excuse me, and we're going to compare them to their closest competitor, which is Lyft. I personally use Lyft more because they're generally cheaper, but of course that means they get less revenue. So let's go ahead and check out Uber. So here's our most recent Investor Day report, which came out February 10th, 2022. So this is quite dated, okay? Now, Uber is a company that does a lot of things. Obviously, we've all used it. You know, you want to go somewhere, you don't have to call a cab. You just get on your phone and you order a cab, basically, and a person comes and picks you up. I've used it many times. I think it's a great service. I freaking love it. And it's cheaper than a cab. You can also get stuff delivered, Uber Eats. You can sign up for their subscription service. I don't do that. There's a lot of good stuff going on with this company, okay? I think it's a great company. But that doesn't mean that I was going to go ahead or I'm going to go ahead and buy this stock. So here they are kind of talking about like, oh, here's the news. They were doing good before the you-know-what, and they got hurt pretty badly after the you-know-what. So I expect they probably packed on a bunch of debt. We'll see. All right. Q4 results. Gross bookings are up 51%. Trips are up 23%. And adjusted EBITDA, that's a warning sign, is $86 million. Remember, adjusted EBITDA, what that means is they take actual GAAP, generally accepted accounting principles, profit, and they add back interest, taxes, depreciation, and amortization. They just get rid of a bunch of expenses. So they, make themselves look more profitable. But GAAP, generally accepted accounting principles, is there for a reason. It's there to match expenses to revenues so you can actually see a more accurate depiction of a company's financial performance, okay? I'm an accountant. I'm a genius. Strong growth despite the you-know-what, blah, 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 blah. So we move rapidly to focus on growth opportunities while securing our future. So they did some divestitures, which means they sold parts of their business. Okay, that's fine. They have some operating initiatives. They did some acquisitions. Kareem, Corner Shop, They bought Postmates? I didn't know that. AutoCab, Drizzly. Is it this? This is Grizzly. Did they buy Grizzly Wintergreen? And product development. So it looks like they're trying to, obviously cut costs. They cut $1 billion run rate fixed cost reduction. Great. That's freaking awesome. So this report, there's not a lot in here. It's just basically, shilling. But this is what they do. They do mobility. People pick you up. They deliver food for you. If you're lazy, you don't want to go out and get it yourself. And I guess they do freight now. That's really interesting. And you can see that they've had pretty significant growth over the past couple of years, past couple of quarters. They got hammered pretty hard during the pandemic. I can't fault them for that. But that doesn't mean they're a great buy, okay? So let's go ahead and look at their annual report. Let me make sure I'm sharing my screen. I'm always paranoid I'm not doing that. We are a technology platform that uses a massive network, blah, 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 to power movement from point A to point B. They have 4 segments: mobility, delivery, freight, and advanced technology groups. What is that? The ATG is primarily responsible for the development and commercialization of autonomous vehicle and ride-sharing technologies. I thought Tesla was the only one that did that. That's weird. We announced the sale of our ATG business to Aurora. Our ATG business is included within our ATG and other programs. We completed the sale. Okay, so I guess they sold it. I guess, that's fine. It's not the end of the world. Now, what I like to read is a couple things on a financial report. You want to look at risk factors because the company actually discloses to you some of the risks with the business. You need to go read that because you can find a lot of things there that you did not know about. You want to go read management's discussion and analysis, which, we can skip that for now. And then we're going to go look at the financial statements. So let's go ahead and go down to the risk factors. Let's see what could be affected by this. Now, a big thing is here, This is a big risk with Uber. Remember, the employees are currently the people that drive for Uber. They're independent contractors, which means Uber just pays them. They don't have to provide them. They don't have to pay their matching self-employment tax. They don't have to pay, unemployment tax, for their employees. There's a lot more expenses that you have to pay when you have an employee versus you have an independent contractor. An independent contractor, you don't really control their schedule. You just pay them a set amount. You don't have to withhold anything. You just pay them. For example, I'm kind of an independent contractor with my tutoring business. I get paid my gross earnings, and then I have to pay my own taxes and figure out my own tax deductions, blah, 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 blah. Now, with Uber, there's been a lot of controversy with, multiple lawsuits, I guess, of trying to make drivers for Uber reclassified as employees. That would probably negatively affect their profit margins, okay? Just saying. Let's see. The mobility, delivery, and logistics industries are highly competitive with well-established and low-cost alternatives. There's a lot of competition, okay? And there's more competition coming in with autonomous driving. Tesla is a competitor, okay? I mean, they're not a huge competitor at this point, but with their plan to do robo-taxis, that could potentially be a threat for Uber. So Uber is going to have to keep investing to try to compete with that. Okay, let's see. To remain competitive in certain markets, we have in the past lowered and may continue to lower fares or service fees in the past. Exactly. The more competition you have, the lower your freaking margins are. We have incurred significant losses since inception, including in the United States and other major markets. Losses. We expect our operating expenses to increase significantly in the foreseeable future, and we may not achieve profitability. To me, that's a massive warning sign. It's like, I don't care how amazing their revenue growth is. I don't care. If they're not profitable, I'm not interested, okay? Because you're basically buying, it's almost like buying a crypto. Like there's nothing underlying that company. I mean, yeah, they have assets, and they probably have some equity. But at the end of the day, there's no like cash flows. There's no positive earnings coming in that underlying. So when you buy this company, you're buying an investment that's losing money. You're not getting money as a shareholder, okay? That also indicates there's probably negative cash flows and share dilutions. Let's see what else. Some of these are just generic. Like, I wouldn't really worry about a lot of these, but you definitely want to read this, okay? Because they disclose a lot of interesting stuff. Our business is subject to numerous legal and regulatory risks that could have an adverse impact on our business. That's going back to the drivers potentially being reclassified as employees. The market price of our stock is volatile. Now, they have this summary of risks, and then they have the risks going into more detail. So you definitely want to check that out. I mean, we can skim management's discussion and analysis. I don't really care about the stock price. I mean, here they are. Oh, look, from January 20 to December 20, this last year, we had great returns. Management's discussion and analysis. Let's see. Item 7, page. They don't have freaking links. That is so annoying. 52. Okay. Blah, 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 blah. Okay, blah, 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 blah. COVID, driver classification developments. Okay, financial results, blah, blah, blah. So there's really not much here we have to read. Let's go ahead and actually look at the fundamentals, okay? So Uber's market cap is currently $47 billion. Their revenue is $21 billion. Their net income is negative $362 billion. And they have 2 billion shares outstanding, okay? That's probably going to increase. They have a beta of 1.31. That means they're more volatile than the market. And the analysts are saying buy with a price target of $50. How? They also have earnings coming out August 2nd, 2022. Now, if you watch this video and you're like, oh my God, Uber's trash, strong way I look to the financials. If you just have this as a speculative investment, whatever. You can do whatever you want, okay? I'm just saying personally, I wouldn't buy a stock like this. I'm not a fan of these types of companies that are unprofitable. Let's look at the actual stock performance. Okay, so you can tell how clownish the market was. This is perfect evidence that we were in a massive bubble. Uber, which was probably had massive declining revenues and was probably losing money hand over fist during the pandemic, their stock price went up massively from the bottom, March 2020, to looks like it topped out April 5th, 2021. And ever since then, it's sold off from, looks like, $60 down to $23. I mean, I feel bad for people that bought up here. I really, really do. Because that, to me, that's like an obvious bubble. Let's look at the financials. So they have very significant revenue growth. They had a decline in 2020, obviously, and then the stock went up. What? Let's look at their gross margin. 47, 54, 53, 53, 46. Now, I want to compare this to their competitor. I think this is their primary competitor, Lyft My Gift. What is Lyft's gross margin? Lyft's gross margin is actually lower than Uber. And honestly, like, to me, that makes sense. I mean, this is just like circumstantial, but, you know, Lyft always seems to be a lot cheaper. And I use them more because they're cheaper. I don't really care. I'm not dedicated to Uber. But their competitor, Lyft, has lower gross margins. What about revenue growth for their competitor? 200, 167, 53, 131, 24, 56. So Lyft's revenue is growing a lot faster. Now, Lyft in the last year had, let's see, they're trailing, $3.4 billion of revenue. And Uber had $21 billion. Okay, so Uber is much, 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 much bigger than Lyft. So even though Lyft potentially has higher revenue growth, it's a much smaller company. I mean, that's just how it is. Let's go back and compare some other stuff. Shares outstanding. Let's see. So starting in, let's look at the annual. Okay, they've been issuing a lot of shares. Look at that. 160% growth, 40% growth, 8% growth. So a lot of this revenue growth that you see here, you've actually probably not gotten that revenue growth because of the massive share issuance. I mean, so when you're like, oh, I'm getting revenue growth, your revenue as a percentage, your revenue or your percentage of revenue has actually gone down. Your share of the company's revenue has probably gone down. Profit margin. Okay, somehow they had a profit. That was probably some kind of, accounting adjustment. They had one positive year of profit margin, -65, -60, -2. Let's look at their most recent quarterly profits. -32, 29, -50, 15, -86. I mean, they're losing money hand over fist. Let's go look at their balance sheet. Cash and cash equivalents. So their total current assets are $8.6 billion. Their total current liabilities are also $8.6 billion. That's basically a current ratio of 1. Usually indicates they're not going to go out of business within a year. But even if it's lower than 1, they would have to issue cash to get more money to keep their business alive. So I don't think Uber is going to go bankrupt within a year, but you never freaking know. Okay. Let's compare long-term assets to long-term liabilities. They have $24 billion of long-term assets, and they have $14 billion of long-term liabilities. Now, what do these consist of? PP&E, long-term investments, goodwill. So basically, roughly, 40% of their long-term assets are goodwill. Now, if you cut out the goodwill, their long-term assets are $14 billion, and their long-term liabilities are $14 billion. So really, they don't own any of their assets free and clear, or you as a shareholder don't own any of the assets free and clear besides goodwill. Like, you basically own goodwill. That's basically what you're getting when you buy the stock, because the actual tangible long-term assets are exactly the same as the actual long-term liabilities. Let's see if debt growth has exploded. I wonder how much debt they packed on because of the pandemic. All right, let's see. So 2019, it looks like they were, paying off debt a little bit. They went from 12 to 10, and then they packed on obviously about, $1.8, $1.9 billion of debt in 2020, probably because they're burning cash hand over fist. And then they added even more debt. Let's look at their statement of cash flows. Negative operating cash flow. They're not even generating positive cash flow from their business. And look at one of the biggest add backs on the statement of cash flows, share-based compensation. What is their share-based compensation in 2021 as a percentage of their revenues? Let's do 168 divided by 17,455. So their share-based compensation in 2021 was roughly almost 7% of their revenues. To me, that's pretty freaking high, but y'all can keep your own opinions. They're making some big acquisitions. They're in a growth phase, okay? But obviously, if they're not generating operating cash flow, they have to finance all of these acquisitions with either share issuance, which dilutes you, or debt. And we're going into a rising interest rate environment. I don't like that. And you can see they're issuing debt. They're issuing shares. Holy freaking crap. Negative free cash flow margin. Let's look at the ratios. Now, they don't have a PE ratio because they're not profitable. Price to sales, 2. Price to books ratio, 5. Price to operating cash flow, 262. Let's see. Debt to free cash flow. Well, they don't have any free cash flow, so they can't even pay off debt. And look at all these like return metrics. Negative, 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 negative. Total shareholder return, -5, -18, -40, -160%. I mean, to be honest, like, a lot of these things look better than Lyft. Like, Uber has higher gross margins. They're a much larger company. I mean, obviously, they're going to do better. But at the end of the day, I don't see what there is to like about this company at this point. I mean, it's unprofitable. They don't even have positive cash flow. Let's say they've had positive cash flow in the most recent quarters. Okay. They did have positive operating cash flow for the third quarter of 2021 and in the first quarter of 2022. Barely $15 million. And they still have a lot of share-based compensation. It's higher than their freaking depreciation. So for the foreseeable future, until this company really starts generating strong operating cash flows, they're going to keep packing on debt. They're going to keep issuing shares. I can 100% guarantee that, because how else are they going to get the money? Where's the cash coming from? It's not coming from their business. I mean, think about it. Let's say you make 50 grand a year and you spend, after taxes, and you spend 60 grand a year. That $10,000 difference has to come from somewhere. As an individual, you can take on debt. Companies have the option of issuing shares. I mean, it's obvious to me. They're going to keep diluting people. Let's look at the forecast. Oh, my God. And here are these clown analysts. Oh, it's a buy. I don't know how. It's losing money. It's diluting. They're packing on debt. I don't see how it's a buy. I don't understand. I'm not saying it's a bad company, but holy freaking crap. So at the end of the day, me personally, I'm not touching this stock with a 10-foot pole. I'd rather wait till it becomes profitable, and they've proven over several quarters or even years they can have positive operating cash flow. They can have positive free cash flow. Because right now you're just buying a money-losing business that you're praying will at some point be profitable, which it hasn't been for years and years and years and years and years. So I can't even model this company out. It's not profitable. But here's the thing, guys. When earnings come out, if they beat expectations, the stock will go up. You'd be like, "Oh, strong man, the stock went up, so you were wrong." No, I'm not wrong. I don't care what the stock does in the short term. I really don't care. I don't buy businesses that lose money. You can do that as a speculative investment. Go right ahead. But I don't buy businesses that lose money. So that's kind of my thoughts. I mean, I don't hate this company, but I don't like it either. All right. Let's do some comments and then I'm done. This is my boy Alex. Go check out his channel if you like soccer. I don't watch sports, but if you like it. Really got to work on setting notifications, bro. I don't do notifications. I mean, whenever I get time, I make YouTube videos. It's as simple as that. Because I have kids, I got crap to do. When I get an opportunity, I set the freaking video and I go. In the city, everything was within walking distance. I live in the countryside where Uber is useless. I mean, people use Uber. I've used it a bunch, especially if you, go out to the bar or something. Strong man for president. Nope, I will never run for office. I am not a politician. Could you imagine me running for office? And then people show my YouTube channel? I would never win an election. I'm surprised Uber doesn't have cash flow like Apple with the amount of times I order food from there. I mean, God, they I don't know, man. They seem to have like a lot of discounts and sales and whatever. Like I don't see it. It makes sense to me they're not profitable. I was lucky enough to get an Uber in Utah after an hour. The only two drivers in town were married with kids, so only one could be available at a time. I mean, like I've had very positive experiences with Uber. I like the company. I've used it, but I also use Lyft because it's cheaper. And it's cheaper because they're trying to compete with Uber. What about Uber's flying pizzas? Is that a thing? Uber prices are absolutely ridiculous. Under high demand, it goes from $20 to $50 in minutes. Oh, yeah. Oh, yeah. You can get hammered by freaking Uber, man. Those drivers can make a killing. I'm a Lyft man. Lyft My If gives you 10x points if you use them. I love the NFL intro. I do, too. I think people made some good intros. I bought my Boober stock for $15 and sold it for $30. I mean, hey, you made a good return there. But, I mean, were we not obviously in a clown market? If Uber, which got hammered by the pandemic, the stock went up like 2x. That's crazy. That doesn't make any sense. It's the future, bro. I wonder if Stink Blow pumped it. Investing in Uber is like looking both ways before crossing the street and getting hit by an airplane. These rideshare companies are on that fake it till you make it game, losing money in perpetuity and avoiding claiming employees. And I can see why they don't want employees. I mean, and personally, I'd rather be an independent contractor because then I can, deduct my expenses. I can use mileage, maybe even have a home office. There's a lot of benefits to being an independent contractor. For example, I have a tutoring business and YouTube is a business, so I can take a home office deduction. I mean, there's a lot of benefits to it. But of course, you pay the full self-employment tax. So that's another thing. Let's see. Go after Chris Sane. He's so dumb. It's not even fun to make fun of him. At least with Lyft and Uber, I can get a ride. Taxi companies in Norfolk, Virginia, may show up half the time ever. Uber shows up in 10 minutes tops. I've actually gotten a Uber from what's that bar called down there? PBR. I don't know, have you been to PBR in Uber in Norfolk? I had to wait like an hour and a half to get a freaking ride. It was like 2 a.m. This was like a year or so ago. I don't really go to clubs anymore. Strongman, have you looked into Prosys? It makes 50% in the last month. It is a company that owns a huge stake in Tencent, but it sells at a discount compared to the actual. I've heard about that. I haven't looked into it. I think go check out Capital Mindset. He talked about it. I've been in a bear market since mid-2021 because I was accumulating BABA shares, so definitely feeling calloused. We all feel the pain, okay? I have a lot of money in BABA. Not as much as VT, obviously. I remember when you started, it annoyed me. You kept ragging on Kevin, but you were so damn funny. I was hooked immediately. I'm irresistible, bro. I'm an acquired taste. Like most people, they start by hating me, and then they learn to love me. You know what I'm saying? Let's see. Warren Buffett is a clown for investing in airline companies. Before the pandemic, unlike the number one investing forecaster. You're looking at the number one investing forecaster, ladies and gentlemen. I forecast stocks, bro. I nail the bottoms and the tops. I'm from Norfolk. No, you're not. Are you really? You been to PBR? Cole, my butthole? And yes, Cole, I will react to your video, okay? Here's the thing. I got to take the kids to the grandparents, and then I got to freaking watch my daughter, who's 2 months. So I might have to do the reaction while I'm holding her. Strongman is like drinking scotch. I swore off liquor. I'm done with liquor. Instead of using Uber, just get a DUI like meat breath. That's malicious disinformation. He didn't get a DUI. How did you come about your investment methodology, i.e. no spec, only profit? Because I'm an accountant. I mean, like, I'm not a Wall Street investor. I'm not a Wall Street analyst. I've never been an analyst. But as an accountant, like, obviously I focus on the financials. And to me, it's common sense. An investment is something that you want it to pay you back. You want to make money. So if you just think about it from a logical sense, if you put money into an investment and then it just doesn't pay you back, you're not getting any return. You're losing freaking money. You're just hoping the stock price goes up because other clowns buy it from you. Do you like Google stock? I mean, it's a great company. I haven't really looked into it personally. LaFufu did he really? Of course he did. Jack Brown's Burgers, downtown Norfolk, was my spot. I never heard of that. I like going to, what's that rooftop bar? It's in the Hilton. Grain. I love downtown Norfolk. I go to Grain, well, when I used to go to Norfolk. Then I hit up PBR, and then there's like a bunch of bars on that street. I forgot what the street name was called. But yeah, Norfolk's fun. It's a good night out. If you're ever in town. Uber and Lyft, great products, terrible investment. 100% agree. All right, guys, that's about it. Hope you liked it. I'm not interested in Uber whatsoever. You guys know me. If it's unprofitable, I mean, duh, I'm not going to freaking buy it. Like, it's just like buying a crypto, basically. All right, guys, talk to you later. Cheers.